Hi, everyone. This is Tony Nash with Complete Intelligence. We're here doing a quick hit, which is one of our quick discussions. Today, we are talking with Tracy Shuchart, who is a portfolio manager with a private equity fund, and she is one of the foremost experts on crude trading and a bunch of other stuff. So we've had a number of conversations with her already, and we're really lucky to get a little bit of her time today to talk through things. So Tracy, thanks so much for joining us. I really appreciate it.
Absolutely. Thanks for having me.
Tracy, just a few days ago, I was talking with Vandana Hari, who you know of, former Platts, and knows everything about energy. She was telling me that there's 3 to 4 months of crude oil supply, and that's really the imbalance that we have in markets right now, and why we see WTI at less than 20, and these really, really difficult price hurdles for people to get over. So can you tell us who's trading crude oil right now? Like, is it mom and pops? Is it professionals? Is it, what does that look like? And also, what will have to happen for those prices to rise, or generally?
Right. Well, so right now, as everybody knows, the USO had to get out of front month contracts. A lot of retail platforms.
Sorry, just to clarify for people who aren't trading ETFs, USO is a broadly traded energy ETF.
Correct.
And they've had a lot of problems with the structure of the futures that they trade. So they've had to push back the futures that they trade from the front month, which is the nearest month it's traded, to further back in the channel in hopes that the value of crude oil back in the further off months trade higher than the current one. So they've done a lot of reconfiguration over the last few weeks. So sorry, I just wanted to explain that to some folks.
That's okay. Okay, so that's there. So they're out of the front month. Bank of China just had a big problem with when oil prices went negative. They had a lot of money in the front month. They're out. You also have most retail platforms are not allowing clients to, or most retail brokers are not allowing, regular retail to be in the front couple months actually. So really all that you have trading the very front month are, the big funds and anybody who's been hedging, and then, probably, maybe a bank or two or something there. But there's just not, it's definitely not retail that's in there. And there are a lot of big players now that are not in there.
Mm.
So kind of what, when we get towards expiration, the problem with that is that most of the funds are pretty short. And most of the hedgers are pretty short. So, and the banks are on the opposite side of that trade. But when we come to expiration, what I'm worried about again is we're going to have sort of a no bid scenario. We're going to have that vacuum once again because you're not going to have any natural buyers there.
Okay, so the WTI traded in the U.S. goes negative, but WTI traded in London on the ICE doesn't go negative. Why is that?
They just decided not to let that contract go negative. And the difference between the contracts is the CME Group contract is physically deliverable, right? And the ICE contract is a cash settled contract.
Okay.
So, so they're not going negative, but CME allowed this contract to go negative. And they actually put out a notice about 5 days before that they were going to start letting some contracts go negative.
Wow.
So it kind of wasn't a total surprise. I mean, as soon as I saw that, I kind of thought it's going to go negative.
Wow. And I think both you and I have told stories about how we had friends who wanted to do, like I had a friend who wanted to do a triple long crude ETF like a week and a half before it went negative. And I said, please don't do that. Very similar stories, and so grateful that neither of them did that because it could have been, terrible.
Exactly. Yeah.
So okay, so how do we clear this? We've got 3-4 months of oil just sitting around.
Right. So, I mean, if you talk to most of the big trading houses in Switzerland, like Vitol, Trifare, etc., basically they're base case scenario, and they're physical traders. So their base case scenario, like their best scenario is, it'll be September before we get some sort of hint of a balance left. So what is going to happen? There's either two things. We're going to fill up storage, and then producers literally will have to shut it. If there's nowhere to put it, they literally, that will be, what I call forced shut-ins. If you don't want to shut in, the market is going to force you to do that. So that scenario is going to happen, or or we're going to get, sorry about that, or we're going to get a scenario where people decide to voluntarily cut back. Just
right.
Look at the back end, like CLR, just Continental Resources just did that. They shut in about 30% of their production in the back end, and I think there's about 35 to 40% now that's shut in. So and there's some other basins where that's happening as well, in the Permian, et cetera.
And so that's mostly people in the field they'll probably let go. Will we see people at headquarters and in offices let go as well, or is it mostly those workers in the field?
I think you're going to see a broad range of layoffs. And it's already happening.
Right.
You're already seeing companies lay off a bunch of people. Halliburton's laid off. Everybody's laying off people, and they're not just laying off, field workers, as they're shutting rigs down. They're cutting back on their office help too, right? And with the shutdown, it's even, more worrisome, because maybe they figure out that, well, we really definitely don't need this many people in office. Everybody's working remotely, and we could just have that happen. So, I don't think that the layoffs are done yet. We've only had a couple months of low oil prices. If this continues, literally for, another, 3-4 months, we're definitely in trouble.
So is this time different? If we were to stop today, and let's say things come back to $30 tomorrow, which they won't, but if we were to stop today, would the oil and gas industry look at this and go, thank God we dodged that bullet again, right? Because again,
I was going to say again.
Do they, and then they just go back to normal like nothing happened? Or if it were to stop today, would they say, gosh, we really need to kind of reform who we are, focus on productivity, and become a modern business? How long does it take for them to really make those realizations?
I think what's going to happen, which may not happen, is the money runs out, right? So first you had, right at the shale boom, you had, all these banks throwing money at it. After 2016, banks were like, we're easing up. So private equity guys got in there, and they threw a bunch of money at it. So basically, these guys are going to keep doing what they're doing as long as they have a source of equity and a source of capital thrown at them all the time. As soon as that dries up, then, then they'll be forced, they'll either go out of business, which we're already seeing happen. We've had, over 200 bankruptcies just in the last 4 years alone. And already this year, we're starting high. So they're either going to go out of business, Chapter 7s, not 11s. Or, and the thing is with that is the big guys, Chevron and Exxon that just entered into the Permian, they're just waiting to chomp on some, stranded assets. So, again, what's going to take is, I think it's just the money's got to dry up or they go out of business. That's the way I really see them changing.
Yeah. And we're just at the beginning, which is really hard to take because it's tough already. So, Tracy, I'd love to talk for a long, long time. You know that, but we've got to keep these short. So thanks so much for your time. I really appreciate your insight. We'll come back to you again in another couple of weeks just to see where things are. I'm hoping things change, but I'm not really hopeful that they will. So, but we'll back in a couple of weeks and just see how things are. Okay.
All right.
Thanks very much, Tracy, and thanks for everyone for watching.
Yep. Thank you.